Welcome to Profit Insights, the podcast that helps you navigate the ever-changing world of finance. I'm Dusty, your guide through today's financial landscape. As we step into this episode, we'll unpack the latest market moves and delve into key stories influencing your investment decisions. We've witnessed a phenomenal week on Wall Street, with the major indexes breaking new records. The S&P 500 and the Nasdaq Composite both celebrated by reaching all-time highs, each climbing 0.5% on Friday alone. The Dow Jones didn't hold back either, jumping up by a solid 1% to close at 43,819.27. It's been the best performance we've seen in over a month for these indexes, with the S&P 500 and the Nasdaq boasting weekly gains of 3.4% and 4.2% respectively. This surge is largely a reaction to easing trade tensions with China and a more stable geopolitical scene in the Middle East. Amidst these highs, there was a clear standout: Nike. The clothing giant soared, seeing its shares shoot up over 15% thanks to stellar earnings that blew past expectations. Meanwhile, across the globe, international markets echoed this positive sentiment. German stocks took the lead in Europe, while in Asia, Japan's tech-heavy exchanges impressed with notable gains. India wasn't left behind either, with the BSE Sensex climbing back past the 84,000 mark. On the economic front, fresh indicators paint a mixed yet promising picture of the U.S. economy. We saw the first quarter GDP shrink slightly owing to muted private consumption growth, which has many speculating that the Federal Reserve might lower interest rates. Inflation indicators like the PCE price index tell us inflation is cooling down, posting a 2.3% rise year over year. Yet the core figure, which smooths out food and energy costs, ticked up to 2.7%. Consumer behavior showed some caution as spending dipped by 0.1% in May. Interestingly, this marks the first decrease in spending we've seen this year, largely driven by less enthusiasm for durable goods. Another unexpected drop came from personal income, falling by 0.4%, the first decline since September 2021. However, there was a bright spot in durable goods orders, which surged 16.4%, fueled by a rush of orders for civilian aircraft. Plus, jobless claims saw a decrease, providing some much-needed positivity. Easing trade tensions have certainly been a major trend pushing this week's market activity. The recently announced U.S.-China trade framework has set a hopeful tone, with further deals being negotiated with other big trading partners. Even ongoing concerns over a trade spat with Canada couldn't dampen this optimism. There's also buzz surrounding potential interest rate cuts from the Federal Reserve, spurred by signs of slowing economic momentum and tame inflation. Some speculate a rate cut as steep as 75 basis points by year's end may be on the table. Turning to the commodities market, Brent crude oil prices have held steady around $67 per barrel. Meanwhile, currency fluctuations have seen the US dollar tumble to its lowest level against the euro since late 2021. As we wrap up our discussion, here's a bit of investment wisdom for our listeners. Keep an eye on these developing trade relationships and Federal Reserve moves. They could be game changers for your portfolio. It's moments like this that require a clear head and a steady hand, especially as interest rates and global trade policies come into play. Thank you for joining us on this episode of Profit Insights. Remember, when the dust settles, only the truth remains. Until next time, I'm Dusty, wishing you profitable insights and steady gains.